Good morning, and welcome to Rick Helps Real Estate Show, where we try to make sense of the real estate market in Arizona. And by watching this channel, you'll be well versed on what the numbers are. Well, not only you be educated, but you'll be a hit at all the cocktail parties. Just imagine somebody goes, "Wow, have you seen what's going on in the real estate market?" And that's when you pounce, and you'll probably lose all your friends. Lots of stuff to discuss this morning. So last night I uploaded a video titled "Warning." Cromford Report came out with something they called a red flag warning. I'm going to touch on that this morning. But it's funny how YouTube works. If you put a word out like crash, warning, people flock to it. They just go. If I were to put up some cheery news about real estate with soft music and dancing baby goats, none of you would watch it. So it's kind of fun to watch. We're at 6,100 listings today on a Monday. Now, you know, that's a much, much higher number. We've been running on Mondays between 4,800 and 4,900. So in the past 2 weeks, that number's changed. One of the other things that changed, Terry says, I wear lampshades at cocktail parties. You should, Terry. One of the numbers that has changed is just last week, coming soon listings were writing about 1,200 homes, and now it's back down to 800. I think, while I don't really feel that coming soon listings are much of an indicator, what this move just shows me going from 1,200 to 800 is there's some jitters out there. You know, the agent's probably saying, well, let's go coming soon because, it shows people that your house is about to get on the market and it builds anticipation. I think the homeowners are going, no, I think things are sliding too fast. I want to list it today. Just a theory, we'll see. But here's what I'm looking at on my 7-day moving average. And the chart's a little muddled on purpose because I want to show you some other things. That this blue line up here is number of homes that have come on the market. And the red line is the number of homes that are under contract. See that gap? We haven't seen a gap like this all year, that big of a gap. And that's what has to happen before prices come down. But the other thing I said before prices to come down, well, first of all, you'll start seeing price changes and see how they're going up, price reductions. That doesn't mean that the sales price is down. That means somebody said, oh, I'm going to test the waters. I cringe when buyers say, I want to test the waters and see what it's like. In other words, I want to price too high at first and see if we get a bite. You're not fishing. You don't want to do that because what you're going to do is you're going to discover your new enemy, which is called days on market. Then the other thing that we wanted to look at is pending listings are going up a little bit here. Under contract accepting backups going down. That's interesting. Contingencies, but this is the one I really want to watch. You're not going to accept a contingency unless you have to. And so if you were getting 5 and 10 offers on your house, somebody comes up and says, I'll buy your house contingent on me selling mine, you're going to tell them no. So when you start seeing this contingency number climb, and let me move my mug like it is here, and we still have a way to go. So you can see that, this is last year, but it's trending up. That means more and more sellers are considering accepting contingencies. And if that number climbs even higher, that's a leading indicator that the market is getting soft. So you're going to see people reduce their price. You're going to see them accepting contingencies. They're going to reduce their price a little bit. Then you're going to see them start contributing towards closing costs before they accept lower priced offers. We're not anywhere near that yet. We can't get there until we get a more balanced market. There's still bidding wars out there. And what we saw yesterday was that right here is the Cromford Market Index taking a huge dive down. And it's a swift dive. Did it last year, not quite at the angle that we're seeing the past few weeks. So Cromford came out, and this is a repeat one I put out last night, so I won't dwell on it too much. Red flag warning, the market is changing more rapidly with rising supply and falling demand. While it remains far above normal for now, the Cromford Market Index is dropping fast. So it dropped last year. When you get down to 100, it's considered a balanced market. And now we're still rocking at 400. So imagine this graph going the other way and we hit 400 like we did a couple of years ago. Then we were telling everybody this market is hot it's taking off. You better jump in because it's a leading indicator if this graph was inverted. But now it's turning the other way, and it's telling you that sales are slowing down. Now, what happened last year? Well, it got down here to about 340 and it took off. One of the reasons that it took off was interest rates were extremely low, and Wall Street came in and started scooping up every available single-family home they could. The iBuyers went absolutely bonkers, started buying them all, so it pushed the index up. I don't think that's going to happen this year, so we shall see what happens. What he ends with here, he says, this is probably one of those important times when early action may be required if you are overextended in your real estate investments. I advise a large increase in caution right now. So in other words, stay on top of the numbers. RPG says, when do you suspect it will hit 100 or close thereabout? 2024? If I look at this rate here, that where we're going, and we want to get down to 100, no, I think it probably going to be 2023 based on this velocity. But charts, like anything else, are hard to figure out. But, I don't like to make long-term projections, so we're going to see what's going on. But here's where inventory is going, and I just alluded to it. It's up 56.11. You can see we're climbing higher now in 2021, but we're nowhere near where we were up here. But this was that spike up. Stay home 2 weeks, flatten the curve, right? Inventory, people didn't put their houses on the market. Buyers stayed home. So available homes for sale increased right here. And then it just loosened up, and by summertime, went absolutely crazy. So I don't see this one turning around and doing that this year yet because the rates are too high. This one I kind of like. This is showing the active listing counts by day. And you can see it's not so much the number I'm looking at, but how large the jump is. You compare back to here, I don't see anything spiked up that fast. And it's interesting when you go by price range, because I was curious where the new listings are showing up. And when I filter out and I go 400,000 right here, takes a moment for it to load there. You can see that that's pretty hefty. If I go to 500 to 600,000 in that price range, then, well, let me get rid of the 400 here. There we go. That went up as well. So then I decided to look between $1 million and $1.5 million and to see if the luxury market is going. And here's what's interesting. Yes, it's gone up quite a bit. And I'll talk about what I find interesting about it. 1.5 to 2, it's gone up. But if you look from $1 million to $1.5 million and you see that it's spiked up really quick, we're still only at 368. So it went from 331 to 368. Not a big number. Sometimes on a graph it looks huge, but it's not a big number. And it's historically it's been painfully low throughout the year in that price range. Also, there's more inventory because these homes that we're looking at that are 1 to 1.5 million last year back here were 800,000 to 900,000. So more homes have been added to the price range versus just more homes being listed. So it's an interesting way to look at that number. Now, other things that I'm seeing is that the bidding wars, are they stopping? When we look at the 30-day average, and if I pull up here closings over list price, I'm not seeing a slowdown yet, but this is updated every 30 days. So this one is April, so it's going to take a while. So we're still looking at 58% of the homes are going for over list price. And that can be kind of a complicated number to look at it a little bit, because you look and you say, okay, between 400 and 500,000, there's 2,100 homes, and 62% of them got more than their list. You go down here and find out, on average, they got 17,000 over their list price. But look at the range. Minimum over list was $1. Maximum over list was 111,000. So that really doesn't help you. You can say, okay, well, if I'm buying a house, I'm probably going to have to bid $17,000 because that's the average. Well, some of these homes, people went in and paid by $100,000. Good morning, Jackie. Good to see you. So especially when you get in the million range, look at this, 1 to 1.5, 159 homes sold for more than their list price. But then check this out. You go over on the average, $1 and $345,000. So it shows you that there's bidding going on out there, but it doesn't help you at all in the math when you're trying to figure out how to craft an offer. So I just thought I would point that out. A lot of building going on, but they can't get the materials. So, boy, if that bottleneck improves, we could see an explosion in construction. Now, I talked to a friend of mine. She works for a national company that is building homes all over the country. And she said that he has leased out in many of the parts of the country just huge warehouses to store materials. So I was like, okay, now price of lumber went down, go get some, put it in here. And he's trying to store materials to be ready in case there's another pinch of supply. I had to chuckle at this headline because you know how I like headlines. Scottsdale home builder buys more land for 100 of houses in Queen Creek. 400? Sometimes people just type too fast. How about hundreds of homes? So Shea Homes plans to build more homes in Queen Creek. Well, wow, who isn't? Have you been driving around out there? They bought another 38.55 acres to build nearly 200 homes in Queen Creek, part of a plan to construct a total of 401 houses in a new community it is developing. So the building's going on. And good morning, Stephanie. And it's going on slowly. The average right now is about 12 to 14 months for new construction. And believe me, they would like to lower that time frame, but they just can't get it done. I've heard problems of just getting cement and getting lumber. And then on top of that, getting labor. I know a lady that works at just a Mexican restaurant. And last week she said she was in there working and she had to pull a double shift because one of the employees just decided not to show up. She said it's ongoing. Nobody feels like they can be fired anymore. They just don't show up. It's interesting times. Mortgage rates 5.39 on a national average, and this is a survey that they conduct. So you can see that that's where we're at. I mean, it keeps climbing and climbing. And in the month of May, the Feds are going to come out and they're saying that they're going to do another 50 basis point hike. But keep in mind, they say that, and then when they actually do it, it's already been baked into the cake. The market already takes that into consideration. So on Wednesday when they meet in May and they announce they're going up, 50 basis points, usually the rate doesn't even move. So could we end up over 6? It's kind of looking that way, isn't it? I don't have a crystal ball. How long will we stay over 6? Is the Fed going to wait until, in order to tamp down inflation like Paul Volcker did back in the 80s? Are they going to go ahead and really put a crimp on the economy and slow housing? And if so, how severe? Because right now, there's a lot of people out there that want to buy. And just like in the 80s, I wanted to buy. All of my friends wanted to buy. We were renting little apartments, and we just wanted to get a house. We just got married. So rates went climbing up. We didn't care because, we just really didn't know. I mean, we didn't have the internet. I'm aging myself here, but there was no research. We looked and go, let me get my brother-in-law help me with the mortgage. He's in the banking business. He sits down and says, well, you got this loan, this loan, this loan. Here's the payment. And we just looked at the payment and said, we can afford that payment. So now the house that I bought was $112,000, I believe. No, $103,000. My brother thought I was loony. And it was, we were buying it from my wife's cousin. It's a beautiful home, Cape Cod design and everything. And 2-story, just really, I loved it. And we got an 11 3/4 rate. And get this, my payment was negative amortization. So every payment I made, my balance went up. My dad was in real estate at the time, and he's like, Rick, what are you doing? I go, don't worry about it. Rates are going to come down, and we're going to refinance. And they did, and we did. But I wouldn't recommend anybody do that because I'm getting the statement going, now I owe $105,000. So it was not a good loan. But my point is, when you really want to buy, you'll do desperate things once you find that payment. Now, a lot of concern that people are going to get into a house, they're going to overextend themselves, and the house is going to go down in value. And and you'll have to move. Well, you won't necessarily have to move, but it doesn't feel good when your house is going down in value right after you bought it. I still think we're a long way from even considering that scenario because there's way too much demand and there is just still not enough homes available in the Phoenix area to make up for all the people that are moving here. The other concern I hear is taxes. Once they reassess, my tax bill is going to go way up. Fortunately for Arizona, our base on taxes and the way we figure them are nowhere near like you see in Texas. Take a look in Texas. Everybody's moving to Texas. They're going from California to Texas. You ever look at taxes and houses in Texas, and it varies by suburb. It's unbelievable. You can have a $300,000 house in Texas, and your taxes are $15,000 a year, maybe even higher. So I don't know how people do it. California's got Proposition 13 to where if I bought a house in 1980, my tax rate can only go up 5%. And then when the house gets sold, then it recalculates. That was a law that went in by a guy named Jarvis to try and keep senior citizens from losing their house because of their tax bill. So I think it had good intentions. I don't think it hurt them, but it's interesting. Carlos says that's the way it should be, still be. Buy a house if you can afford it. Nobody wants to rent forever, and rent is, as much as we're complaining about interest rates, rent is 100% interest rate. You're not gaining any equity. So it's an interesting time. So stay tuned. Like the Cronford Report says, it's time to watch these numbers over the next 3 weeks very carefully. We've been on this channel looking at things and saying 2 weeks doesn't make a trend. We need to watch things over the long term. And now here comes the Cronford Report saying, watch the next 3 weeks. I'm going to be on again tomorrow morning. I'm going to be out of town on Wednesday and Thursday. So it depends on how much, cell coverage I have and how much data I have. Sometimes I get places and I'm screwed. So we'll see what happens. Until then, see you tomorrow morning.